Hey guys, welcome back. I'm Jeb Smith, real estate broker here in Southern California, and today we're going to discuss foreclosures and give you a market update. Is there a huge foreclosure wave coming? Should you wait and purchase a home? That's what we're going to discuss today. We're also going to go over one of the latest reports that just came out from the National Association of Realtors that goes over the recent jump in pending home sales. It's also going to give us an update on each of the four major regions in the United States with regards to growth, what's happening with distressed sales and foreclosures in those markets. But before we get into that, I want to take a minute and introduce myself again. I'm Jeb Smith. I'm a real estate broker here in Southern California. Like I mentioned, my channel is all about real estate. It's helping buyers, helping sellers navigate that home buying process. So if you're interested in staying up to date on all things real estate related, as well as mortgage related, do me a favor and hit that subscribe button and hit that bell notification so that you get notified as I release videos so that you can keep up to date on everything that's going on. So let's take a minute and talk about foreclosures. Is there a huge foreclosure wave coming this year? What's going to happen as we move into 2021 with regards to distressed sales and foreclosures? Well, I'm going to bring up a report, like I mentioned earlier, from the National Association of Realtors in just a moment that talks about distressed sales, but I'm also going to pull up our local MLS where I show you, I'm going to do the search right in front of you that shows you what's going on right now in Orange County, in LA County with regards to short sales and foreclosures. Is there this huge wave coming on the market right now? How many have actually sold in the last 2 months? What should we expect as we progress? But that's going to be in a minute. So let's take a minute and just talk this whole scenario out. So a lot of people believe that we have this huge foreclosure wave coming because of everything that's happened with regards to COVID and job layoffs, unemployment, furloughs, etc. All of these people that have taken mortgage forbearance. Because if you read the mortgage forbearance numbers, it looks scary. It looks like you've got a lot of people that aren't making their payments and that all of that inventory could potentially come to the market. Well, I'm a firm believer that that's not going to happen for a number of reasons. One, the people that took mortgage forbearance, because they're able to take those missed payments and either defer them to the back of their loan, set up some sort of repayment plan, some sort of loan modification with their lender, I believe that's going to keep a lot of people in their property and a lot of those homes that could potentially have come to the market off the market, because it's going to give people time, up to 12 months from the time they originally accepted forbearance, if they had a federally backed loan through the CARES Act, to give them an opportunity to get back on their feet and start making those payments. So if you started mortgage forbearance in, say, June or July, you essentially have up until June or July of next year not to make mortgage payments. This gives you an opportunity to not only get back on your feet if you've been unemployed, but maybe you've regained employment and you still want to hold on to the mortgage forbearance, and you can actually put money in the bank. It gives you an opportunity to start saving money so that when the mortgage payments do start again, you're in an opportunity to, or you have a position to start paying that payment again. So you have the mortgage forbearances that are a year out. You also have a large portion of people that took mortgage forbearance that didn't actually need it. Now, I've heard numbers as high as 20%, could be higher. It could even be a little bit less, but 1/5 of the people that actually took mortgage forbearance didn't need it. They took it because it was free. It was an opportunity for them to not make mortgage payments, and they could take those mortgage payments and essentially add them to the back of their loan. There were no effects to their credit. There were, maybe they used that money to pay off credit card debt. I heard that in several comments that were left in videos. So it gave people an opportunity to stop making payments and start saving money. So even though the mortgage forbearances seemed high, you had, say, 1/5 of those people that didn't need it, and say the other 80% of the people did. Well, those people have an opportunity to push those payments off to, either the back of the loan, a repayment plan, a loan modification, or whatever, like we discussed just a moment ago. So, that's the reason that I don't think you're going to see this huge foreclosure wave coming. And it's a lot different than 2008. I'm going to link a video here above where I discussed the differences in 2008 versus 2020. And the reason we saw so many foreclosures in 2008 was because of the loans that were originated the 3 to 5 years prior to that time. So when the financial collapse came, you had all of these people who had essentially liar loans where they were able to purchase a property without putting any money down, so no down payment. They were able to just state their income without any verification. And also, almost forgot, they were on short-term loans. A lot of them interest only, a lot of them 3 to 5 year adjustable rate loans. And so what happened was when those loans came due, those people were in a position to no longer refinance because values had come back down and they had no equity in the property. And once that loan adjusted from interest only to a fully amortized payment, those people weren't in a position to continue making that payment. And therefore, that led to a lot of foreclosures. That's completely different than the market we're in right now. Right now, we're in a market where people have equity. You have to buy a house with some sort of down payment, unless you're VA where you can do no money down, but most people are buying with at least 3.5% down, which, if they purchased more than 2 years ago, and I've mentioned this on several videos, chances are they have at least 10% equity in the property. And if people get to a position where they can no longer make their payments, for example, they were laid off from their job or unemployed or fired or whatever, they now are in a position to sell that property without foreclosing. And you always have the option as well of doing a short sale, which is where the lender allows you to sell the property for less than you actually owe on it, which would also keep people from going through the foreclosure process. What people don't understand, a lot of people think the banks want to foreclose on you. The banks do not want to foreclose on you. It is a costly process. It costs a lot of money, takes a lot of time to go through the foreclosure process. The lender, the mortgage holder, the mortgage servicer, much rather you go through the short sale process and sell that property yourself with a realtor versus going through the foreclosure process. It saves a lot of time, a lot of money by doing the sell versus the foreclosure. And that's why I don't think you're going to see this huge foreclosure wave coming. The second reason behind I don't think you're going to see this huge foreclosure wave coming is because the market is on fire right now. You have very little supply, very high buyer demand with low interest rates. And I'm going to pull up some graphs here in just a moment to show you what's happening, in different regions of the United States with regards to pending home sales. Pending home sales are existing homes that are selling. And this is a report that comes out month over month, and this is going to show you the growth in pending home sales and what's happening in those regions. And the bottom line is that the market's on fire right now. And typically when you have low supply, high buyer demand, that is a market that's going to continue to move sideways to up. And with that being said, if you do have foreclosures that come to the market, chances are they're going to come on the market at market value. You're not going to have these banks just send properties to the market at low values just to get rid of them. If they come to the market, chances are they're going to be priced at market value, which in this market is not going to change much because you have such high demand. Any supply coming to the market is just going to get purchased. It's likely going to get bid up in price just because there are so many buyers looking to purchase. But that's enough of that. Let's pull up that report here from the National Association of Realtors, take a look at it, and then we'll pull up the MLS report and also take a look at that as well. Okay guys, here is the existing home sales report that I mentioned from the National Association of Realtors. I will drop the link in the description below if you want to check out the actual report, but I'm going to summarize it here. I took the time to highlight the parts that I thought were, keynotes of it. I'm not going to go word for word, but I am going to read the highlighted parts. And then again, if you want to check out that link, hit that link below in the description. So existing home sales continued on a strong upward trajectory in July, making 2 consecutive months of significant sales gains. Each of the 4 major regions attained double-digit month-over-month increases, while the Northeast was the only region to show a year-over-year decline. Now, if you remember my market update from last month, I told you that July numbers were going to be booming, just based on the activity that I saw in the market. and it showed to be true. So it's not an I told you so. It just shows you that the market is booming. Total existing home sales, which are completed transactions that include single-family homes, townhomes, condominiums, co-ops, jumped 24.7% from June to a seasonally adjusted annual rate of 5.86 million in July. The previous record monthly increase in sales was 20.7%. That was from June, like we mentioned, and we're up 8.7% from a year ago. The median existing home price for all housing types in July was $304,000. That's up 8.5% from July of last year, as prices rose in every region. July's national price increase marks 101 straight months of year-over-year gains. For the first time ever, national median home sales or home prices breached the 300,000 level. So now the average or the median home price nationally is over 300,000. Total housing inventory at the end of July totaled 1.5 million units. That's down from 2.6% in June and 21% from 1 year ago. So we're down 21% from last year with regards to inventory. Unsold inventory sits at a 3.1 month supply at the current sales pace, down 3.9 months, down from 3.9 months in June, and down 4.2 month figure, and down from the 4.2 month figure recorded in July of 2019. Properties typically remained on the market for 22 days in July. That's down from 24 days in June and 29 days in July of last year. 68% of homes sold in July of this year were on the market for less than a month. Individual investors or second home buyers who account for many cash home sales purchased 15% of homes. The reason I thought this was interesting is because I get people all the time saying investors aren't buying homes. The only people buying homes are first-time home buyers. Not the case. First-time home buyers were 34% of the sales in July, but 15% of the sales in July were individual investors or second home buyers. These are people buying second homes, and that's up 9% from June and 11% from July of 2019. Distress sales, this is foreclosures and short sales. It represented less than 1% of sales in July. That's down from 3% in June, and that's up from 2% in June of 2019. So we're up a little bit from June of last year, but we're down 3% from June. We're down 3% in June, up from 2% in June of 2019. So let's go down here, talk about the regional breakdown. So for the second consecutive month, sales for July increased in every region, and median home prices grew in each of the four major regions from 1 year ago. July 2020 existing home sales in the Northeast up 30.6% to an annual rate of 640,000. That's 5.9% decrease from 1 year ago, and the median home price is up 4% to 317,000. Now, remember, you're likely going to see a decrease in sales year over year just because there's less, because we lost 2 months, right? There was 2 months of the market that we lost. So typically when that happens, or we don't know if that happens because we've never had this happen, but when you lose 2 months of the year, chances are your sales are going to be down year over year, especially in the 2 months that we lost because there was really nothing happening during that time. Existing home sales jumped 27.5% in the Midwest to an annual rate of 1,390,000. That's up 10.3% from a year ago. So they're actually up in the Midwest with existing home sales. And the median home price was an 8% increase to $244,500. Existing home sales in the South shot up 19.4% to 2.59 million in July. That's up 12.6% from the same time 1 year ago. The median price in the South was $268,500. That is a 9.9% increase from 1 year ago. And the West, where I am, home sales ascended 30.5% to an annual rate of 1,240,000 in July. That's a 7.8% increase from 1 year ago. The median price in the West was $453,800, and that's up 11.3% from July of last year. Interesting facts there, guys. So look at the MLS and pull up all the active foreclosures in the market at the moment. How many active foreclosures are on the market in Orange County at the moment? Let's take a look here. I'm going to search for coming soon active properties. These are properties that will be coming to the market and are currently active on the market, and we're going to search Orange County. We're going to go down and we're going to select notice of defaults, and we're going to go real estate owned and HUD owned. So in all of Orange County, 3.3 million people, you have 14 active foreclosures and 1 potential foreclosure coming to the market. So not a lot of activity overall in our market, way less than 1%. It's probably 1/10 of 1%. I don't know the actual number there, but we could go and look at it and say, okay, how many are currently pending in the market? So we had 15 active, and between currently pending, we have 34. So 34 current sales that are foreclosures are pending in the market. Again, not this huge number that everybody wants to see. And then we can go back and look at closed. How many in the last 180 days have closed as a result of a foreclosure or an NOD? And we have 85 in all of Orange County that have sold either as a notice of default, which means there's not a foreclosure yet, they're just behind on their payments, or as a result of a foreclosure. And so we had 85 in that time. Again, we're not talking big numbers here. We're talking a very, very small number in the big scheme of things. And we could do the same thing for for LA County as well. We could go coming soon, active. LA County's probably going to have more because it's a way bigger area than Orange County. But we could go notice of default. So we have 79 properties then in the whole area of LA that are either notice of defaults or foreclosures. So again, not a huge number. And we could go back and take a look at it again and say how many are currently active or pending. That number is 126. So you have 126 active notice of defaults or foreclosures in LA County. And then closed. In the last 6 months, you've had nearly 300 close. And I don't know how many people are in LA. 10 million people. I have no idea. A lot more than Orange County. And so still a very small percentage of people that are foreclosing. And that is normal. You normally have foreclosures in a market, short sales in a market that is, that is going up to sideways to up. So even in a normal market where it's appreciating, everything is good, the economy's great, you're still going to have foreclosures and short sales, and that's essentially what you see here. You're not seeing anything crazy out of the norm at the moment. Okay, so there you have it. You've seen the report from the National Association of Realtors with the existing home sales, what happened in the different regions across the United States, as well as what's happening in my local market. Now remember, all real estate is local, so you might be in a market where things are different than they are here in Southern California, but right now the market in Southern California is hot. So if you are a buyer looking to purchase a property, make sure you have your ducks in a row, make sure you're fully approved, you're working with a solid real estate agent prior to making those offers. I'm also going to link to a video here where I give you 3 different tips of buying in this market if you want to take a look at that. But if you do have questions, do me a favor, reach out to me directly, comment below. I'm happy to address those. And if you're a seller, keep in mind it's a seller's market. It's a great time to take advantage of it because properties are getting bid up in price. You're receiving multiple offers. But do me a favor, if you have questions, you have comments, reach out to me directly. I'm happy to help. I hope that video was helpful, but I appreciate you taking the time to watch. I appreciate your support. We'll see you again soon. Have an awesome day. Bye-bye.